AMC squeeze just now. Gary Gensler, the prominent figure at the helm of the SEC, is refuting rumors of his retirement. Not only is he here to stay, but he is making his intentions clear by going after Virtual Financial with a Wells notice. You might be wondering, what does this Wells notice mean and why is it causing such a stir? Let's delve into the details. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Before we explore the implications of the Wells notice, it's crucial to understand that the SEC had already expressed a keen interest in investigating Virtual Financial. There had been attempts to reach a particular deal between the SEC and the company. However, regrettably, the deal fell through, prompting the SEC to take the significant step of issuing a Wells notice. As the news broke, the market swiftly responded, resulting in a decline of 1.6% in Virtual stock after regular trading hours. The media frenzy ensued, and the firm in question has been diligently cooperating with the SEC's requests, particularly concerning the investigation into its internal information access barriers. For those unfamiliar with the intricacies of securities regulations, let me clarify the essence of a Wells notice. Essentially, it is a formal letter sent by a securities regulator to a prospective respondent, outlining the charges the regulator intends to bring against the said respondent. In this case, the SEC has unequivocally demonstrated its intent to press specific charges against Virtue Financial. The crux of the matter lies in a rule that some argue is outdated and fails to adequately address a critical concept known as size improvement. It seems Virtue Financial has been rather forthright and transparent in addressing this issue. So what exactly is size improvement? Let me break it down for you. Imagine there are about 8,000 stocks in the market, and for some of them, there is a scarcity of liquidity on the lit exchanges. In such cases, wholesalers play a pivotal role in providing what can be termed as infinite liquidity at the national best bid and offer (NBBO) or the inside price. This means that even if the lit exchange has only 200 shares of a particular Reg NMS stock available, if Virtue Financial receives an order for 1,000 shares, they will execute the entire order at the inside price. This can be deemed as meaningful liquidity and accounts for a significant 55% of the orders they receive. However, as Gary Gensler floats this new idea, it raises questions about the clarity of the proposed rule. It appears more like a concept in its infancy, with potential rule proposals looming in the distant future. The ambiguity leaves market participants speculating whether any concrete actions will follow or if the focus will merely be on fostering transparency and gathering more information, especially regarding the costs associated with payment for order flow. The speaker in our original script expresses willingness to cooperate and provide further information on payment for order flow and price improvement, even proposing setting the midpoint as a reference point. They have already made proposals in this regard, showcasing their commitment to transparency. In stark contrast, they view the current statements made by the SEC as lacking substantial empirical data. In response, Virtue Financial has diligently furnished real data, underscoring the importance of factual evidence in discussions of this nature. The ongoing investigations by the Department of Justice and the ACC seem to be far from average prose, potentially unearthing specific issues that might lead to significant charges against Virtue Financial. The company, however, has been doing its part, cooperating and engaging in settlement talks. Unfortunately, these efforts have yet to result in a mutually agreeable resolution. Consequently, the ACC is expected to initiate legal action against Virtue Financial, alleging violations of federal securities laws specifically relating to their information barriers, policies, and procedures during a defined period. Given the involvement of institutional investors and the SEC, this matter takes on a heightened level of complexity. In usual circumstances, disputes can often be settled through negotiations, fines, and regulatory measures, providing a path forward for the parties involved. However, the current situation appears to deviate from the norm, presenting unique challenges that demand careful consideration and navigation. The speaker implies that this development is of utmost significance, emphasizing Gary Gensler's return to the stock market arena. This shift in focus could have broader implications for the financial landscape. The reference to the ongoing legal case involving XRP might suggest that its outcome could influence the regulatory climate and have ripple effects on the broader stock market. As a result, hedge funds and other market participants might find themselves navigating uncertain waters. In conclusion, the situation with Gary Gensler and the SEC's pursuit of Virtue Financial with a Wells notice is undoubtedly an intricate and dynamic development. The financial market and its stakeholders are closely observing how events unfold, hoping for clarity and resolution amid the swirling complexities of regulatory compliance and transparency. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching,